All right, guys, welcome back. We're going to now finish up Outdoorsies operating budgets with their budgeted income statement. So that's item D. This is the one we've been working along. Sorry if you can't see that first sentence. It says Outdoorsies estimates its cost of goods sold to be 65% of sales. They also expect interest expense of $16 and income taxes 30% of income for the quarter. Use this information to prepare their budgeted income statement. Alrighty, so let's do our 3-line header because we must. We must. Outdoorsies budgeted income statement. And then again, it was for the quarter. For the quarter ended March 31st, 2020. We said we don't put our columns on here, we just show the total as of March 31st. We follow a traditional format, so sales comes first. So go back to your sales budget for Outdoorsy that we did in step A. So again, we want to grab the total. So 3,029,000. So again, that came from your sales budget. Next comes cost of goods sold. Again, normally, as I mentioned in the last video, normally it would be our DM, DL, and MO budgets multiplied by how many units sold. Since I had to skip that part, that's why this 65% was given to us. So we can continue on even though we didn't do those individual product cost budgets. All right, so take 65% and you'll get 1,968,850. Again, did that in my head. All of a sudden, my math skills have gotten amazing. All right, and gives you gross profit 1,060,150. Now we subtract our operating expenses, or S&A. S&A. Oh my goodness. I said it, but I wrote a totally different letter. Oh, criminy. Yep. S&A expense. All right, so luckily we just did that budget up here in item C, and we got 288,400. It's a little tiny to see. So bring that down, okay, 288,400. So as I mentioned in the last video, you're having to do very little in the way of calculations. All this is pulling. This pulled from the sales budget. This would have pulled from our product cost budgets. This pulled from our selling and admin budget. All right, now we have our income from operations. Income from operations. So subtract and you'll get 771,750. All right, next, if you follow the formats that I gave you in the last video, after our income from operations comes interest expense, which normally is given, or they'll have to give you some way to calculate it. So interest expense. So if you go up here, it says interest expense is estimated to be $16 whole. I know, not a lot. I'm going to go ahead and do a subtotal here because it'll make calculating our taxes easier. All right, so this gives us income before taxes. Subtract and you should get 771,734. Your taxes then assessed based on that amount. So let's do our tax expense. Tax expense is 30%. That used to be the corporate rate. It has gone down since I did this example. All right, so 30% is 231,520. I think now it's down to 21%.